Hello guys, how you guys doing? All right, you're welcome to my channel. So in today's video guys, I'm going to show you how to make consistent money on a daily basis from Binance futures. Okay, how to trade, irrespective of the movement of the market, how to make money when the market is going up, how to make money when the Bitcoin is coming down. All right, so we do that using Binance future. So I'm going to show you how to profitably, trade these contracts on a daily basis. And if you are good at it, you can make $50 per day, $100 per day, $200 per day, and as case goes on. All right guys, so if you have not subscribed to this channel guys, kindly subscribe to this channel. All right, hit that subscription button and share this video guys. And also I want you to like this video and share with your friends. All right, so the first thing you got to do is to first of all sign up on Binance if you have not, and you can use the link for free at the description side. You can use the link there, and when you sign up under me, you get a free bonus. All right guys, so after you've signed up, verify, do all the necessary verification, and ensure you enable your two-factor authenticator, okay, for security purposes. Now the first thing you need to do is to fund your account. After verifying your account, you need to fund your account, fund it with Bitcoin using pay-to-pay and any other available option there for you. Now let's dive into how to trade these futures. So when you come to your Binance, you have these derivatives here. So in that derivative, you have different kind of trading. The first one is USD money futures. Okay, so this one is using the USDT tether. Okay, trading. That is, whether Bitcoin is going up or is coming down, it doesn't affect your balance. All right, so I will show you is the same thing. Most times I use this first one. Then this one, coin futures, means you are using this to multiply your holdings. That is, you have Bitcoins, you want to multiply your Bitcoins, or you have any other coins, you want to multiply it, so you can use the second one. All right, so the other ones here doesn't really have matter to what you are talking about today. So let's first of all dive into, let me show you the first one here. Let me open it. Let me open this one, and open this one here. All right, so now this is USDT future. Now before you can be able to trade on the futures contract, you need to fund your account. Okay, you need to fund your account. All right, so the way you fund your account is you go to, you see this here, this double arrow here. You click on it. Once you click on this, then you'll be able to transfer from your spot wallet to your USD. So first of all, you must have money in your USDT tether. All right, so you transfer the money you have there to this. So any amount you want to transfer, you transfer it, and you click transfer. Assuming I want to transfer $5. Assuming I have money there, I want to transfer. Let's assume you want to transfer there. So you can see we've transferred. The money has been transferred here. Now I have $261 here. Okay, so that is the amount, total amount I have here on my Binance futures wallet. Okay, so the same thing applies here in this. Let me also show you the same thing applies. Now this is a BTC USD. That means we are trading here to multiply our BTC. Okay, so here we have, if you click here, so here you'll be able to transfer your BTC to your coin wallet. Okay, so once you transfer it, you'll be able to have it here. All right, currently I don't have any BTC here, all right, on this futures wallet, so you can be able to transfer it and be able to trade on it. So the same thing applies. So I will just use the USDT tether to explain. The same thing applies on both sides of the market. The only thing that is different is, are you trading on the BTC pairs? Okay, that is, are you multiplying your BTC holding or USDT pairs? All right, so now let's come down to the USDT pairs. All right, so now look at the market here. So the first thing you need to do after you have funded your account is, first of all, you need to understand the environment, to understand what are what and how you can trade on this environment profitably. Okay, so we have the limit order here. So this limit order is whereby you define the price you want to enter the market with, and whether long or short. Open long means you want to, and you assume that the market is going up. Opening short means you assume that the market is coming down. Okay, so we have the market order, means once you click this market order, you instantly your order will be executed as you enter the market. All right, then we have the stop limit, guys. We have the stop limit. Now this stop limit here is whereby you put a condition, assuming, for instance, looking at the market and this condition now, is going up. All right, so but you might think, okay, it's coming, it might come down. So assuming we want to enter short, we want to short the market when the market was trying to break this. Let's assume we want to break this 49448. So you might say 49448. So assuming you want to go short when the market must have broken this position, it's as if it's going up now. Okay, so I can enter the short position now. You can see now, so it's waiting for me here. All right, it has not triggered. Stop limit is waiting at this point. You can see it's waiting. So if this market decides to retrace back, so it will be executed. Now the same thing applies if you think that once this market breaks this, let me assuming once this market breaks this previous high, it will be going up. So you can also put the long one here. That is, you allow the market to play in between this area. So if it's breaking this high, you go long. If it's breaking this low, you go short. Okay, so use the stop limit to set that parameters. All right, so the other thing now you need to check and be aware of is what? The margins. Okay, so the margins, this is the margins, and this actually is the most important thing in margin trading, because now the difference between margin and spot trading is this: you are trading with borrowed money. So the cross margin here is you are, if you select this cross, means you are risking the total balance in your account, but the isolated margin is you are risking the only allocated price for that trade. All right, so if you open a trade with $50 or $100, that's only thing you'll be risking on this. But when you open a trade assuming with $50 here, and your total account balance is assuming is $200 here, okay, so when you open the cross margin, you are risking the whole total of $200. So you should be very, very careful on which one you select. For me, I stick with isolated, especially now, okay, because I open multiple trades most times. So I stick with isolated. That means if anyone is liquidated, that is it. So other trade might perform better and stuff like that. All right, so that's by the way. Then secondly is that we have the margins here. Okay, remember that you are trading with borrowed money. All right. So, and this borrowed money, there you have parameter to set the percentage, how much you want to borrow. Okay, how much you want to borrow. Now, one thing is certain here, and why we use this stuff, you should be very, very careful, because they always make this thing attractive. You look at, you can borrow 125x. Assuming you have only $100 in your account. Okay, only $100 in your account. So $100 in your account. Okay, so you can see you have your $100 can open a trade of $12,500. All right, so meaning if the market goes in 1%, that 1% is times 125% in 1% of the market movement. That's a lot of money for you. Okay, if it goes in 10%, you know what it means? That is 10 times 125. Are you getting it? So that's why people make a lot of money here, but also there's a downside to it. You can lose a lot of money. And also, the higher the leverage, the lesser the liquidation price. So how do I mean? Now, if you are going long, assuming, let me show you here. Assuming you are going long, that is, you expect the market to go higher, and the market is here. You enter at this point, and you're expecting the market to go higher. Now, if you are using 20 leverage, assuming you are using 20x, okay, now your liquidation price might be somewhere here, okay, might be somewhere here. Now, But if you are using 50x, now it will shorten the liquidation price to somewhere here. Meaning, if the market, most times market doesn't go in a straight line. There's always noise in the market. So as that noise occurs, it can take you out, and that will be lost for you. So that's why what we recommend for beginner, at least from 1 to 5x, okay, use 1 to 5x until you are comfortable with the strategy you are trading. Then you can trade to 10 to 20x, okay, 10 to 20x. Then from there, if you are very, very sure of what you are doing, then you can go to 50x and above, okay? So always very, very careful on how you set this. Don't be enticed with this. The more I set the leverage, the higher I can make from the market. It's a trap, all right? It's a trap. So that's it. So now you can see I'm comfortable trading 20x because my position sizing, I've tested it, and I hardly been liquidated with this because I understand my strategies and I know what I'm doing. So I will show you how to build on a good strategy at the end of this video. All right, so now, after you have set your strategy, now the next thing you need to do is to do your analysis, okay? So let's assume here, looking at the market now, looking at this is Bitcoin charts. Now, is it only Bitcoin you can trade on? The answer is no. Once you come here, you can see you have different markets here, different market guys. You can see there are different of them. If you have subscribed to Binance email, you'll be seeing most times, sometimes they'll be sending you an email, Binance features updates. They keep adding different coins here. Like for instance, let me show you. You can see this coin, I think Dogecoin. This is Dogecoin. This is Dogecoin. You can see there are many coins here. But for this, the rule for success in this margin trading is number one, stick to 1 or 2 coins here, guys. Okay, don't trade all except you understand them. Stick to 1 or 2. Okay, don't be jumping from one to another. Okay, stop jumping from one to another. Stick to 1 or 2. That is the secret here, because once you do that, it will help you to always, follow the market movements, okay, so that you can know exactly what the market is doing. Because now I know that this Bitcoin is correcting, and after this correction there might be a pullback. So I'm following this market as it goes up. I'm following it. All right. So because when you are trading different pairs, you might get confused along the line and it might mess up things for yourself. All right. So that is it. Now let's assume that Bitcoin is going up. All right, let's assume that Bitcoin is going up at least. So let me just open a trade here, showing you if I will use a very small leverage to open a trade to show you. Now, assuming that Bitcoin is going up, now using the market size. So let's assume that I want to open a trade. Watch out here, as I'm dragging this, it's showing me total amount of trade. Let's assume that I want to open a trade of $20. This is just to show you, and I'm going long. This trade now will be executed instantly. Okay, now I click on it, you can see it has been executed. Now if I come here, you can see that I've opened this trade. I just want to show you something on this trade. You can see that this is a current trade, BTC perpetual 20x. That is the leverage I've selected, which is this. All right, so you can see the entry price, the market price, liquidation price, guys. This is very, very, very important. All right, liquidation price is very, very important. What do I mean? That if the market goes lower than this price, that liquidation price, then this position will be closed. All right, then we have the margin, which is 28, and this is P&L. That is the fluctuating gain or loss. All right, so that means currently now we are in profit. It can go down, it can go up. It's not certain, so that's it. So now, one thing you should know in this, that after you have placed the trade, always make sure this is a liquidation. 47,924 is what our liquidation price, 47,924. So when you come here, 47,924, you check from your charts, You can see 47,924 is down here. You know what? It's down here. So what you always place your stop loss, guys, you know, above your liquidation price. So assuming I want to place, let me just, because this is just a test market, I haven't make much analysis here to open this. All right, so let me place my stop loss at 50. Let me just, this is 30 minutes chart. Okay, let me follow 15 minutes chart. So we can see, okay, the support has been here. All right, so that's a 49,448. You come here, you click 49,448. So meaning if the market goes down to this level, this position will be closed and I will lose $6 plus. Okay, so you're okay with that. So I place the stop loss is here now. So we are waiting for either the market to go up or it can take me out, and I'm okay with that. All right, so this is how you trade on Binance Future in a nutshell. It's very simple, but the most important thing here is not in placing the trade, but actually understanding why you are in any trade. Okay, understanding why you are in a trade, because the rules to be successful here is, number one, to have a strategy. Okay, have a strategy. That is, have an edge on the market, how you trade. Why are you in a trade? If you can understand your why, you are in every trade, and you can actually duplicate that your why. That means anytime you are in that trade, it is based on that why you are in the trade. So means you'll be here in a long term. And the second thing you need to understand is your why. Okay, your why can be if you are trading support and resistance. If you are trading wave theory, we use wave analysis. We trade on patterns. Okay, we trade on patterns. We trade on waves. Like the market has completed a wave B, you want to trade wave C. Okay, like for instance, I took this trade at the break of this for this wave. So I closed this trade, it was profit. Okay, so now we are waiting for this either correction downwards. I just opened this trade to illustrate. So what am I expecting for? Either this thing goes up here or come down, or the second way, it goes up like this, come down like this, and go up. So these are the two things we might be expecting from this. So whichever way, we will now see. All right, so once you understand your strategy, once you understand your own rules of entering the market, stick to it, guys, stick to it. Then the second thing is that you need to have a good position sizing. All right, good position sizing. If you are entering the market with $50 for every trade, stick to that $50 for every trade. Not that today you enter with $50, tomorrow you might see, let me enter with one, especially when you have lost money in the previous one. You want to enter with $100 or $200 or $300 in that trade. Who knows whether that one will also be a loss. Okay, so have a proper position sizing. Okay, and also you must have a stop loss. Okay, have a stop loss in your trade. Now you can also use this forex trading view tools here, like long position. For instance, I entered here. Okay, you entered here. You want to calculate your position sizing. You entered here. All right, so let's assume we're expecting the market to get to 51.3. Then our stop, remember our stop loss is here. Okay, so that is 1.15%, 1.53% against 2.1. So which ratio are you trading? At least if you are entering a trade, before you enter, you should calculate your position size and your risk to reward ratio, kind of. At least if it's 2 to 1, you can see here it's 2 to 1 based on this. If you are reducing it, it's reducing. That means the risk to the reward is 2 to 1. The second thing that you need to understand here is that as you are in profit, okay, you keep adjusting your stop loss, because the market can take you out anytime. So as you are in profit, you keep adjusting your stop loss. Because it will help you to always manage your gains, not your losses, which is a very good psychological things, right? Okay, so that is how these things plays out. All right, so the other thing you need to understand is that there are fees you pay in opening a margin trade. Like for instance, I'm in a trade now and you can see maintenance margins is to maintain this margin. That means I must have $1.61 USD in my account. So the higher the position, the higher the maintenance margin. So if the price is, the total amount I have is less than this, automatically this position will be closed. All right, guys, so that's how these things plays out. Okay, so also there are other alternative to Binance features, okay, like Femex or Bybit. I will do another video. Other platforms that are more flexible that you can also use to trade crypto futures. Okay, so I will do a video on that too, to show you how to use them and stuff like that. If you have any question, please kindly drop your question, and don't forget to subscribe to this video, and kindly subscribe and sign up on Binance using the link below and get a bonus if you haven't done so. Thank you for your time, and see you in the next video.